So in the last video, we looked at the distribution phase of price. And honestly, distribution candles make trading look so easy. We see a manipulation candle, we get involved towards the opposing external range liquidity. And price just respects structure and it makes trading easy for us. The truth is, this pattern doesn't always play out. We get completed manipulation candles and then distribution failing to meet those targets. We need to understand why that happens so that we can ensure we're in the right trades at the right times. So why does manipulation fail to complete these patterns? There's a very good reason for it. So what is failed manipulation? It's confirmation of manipulation candles that do not lead to a distribution candle that completes AMD. So this isn't the exact why manipulation fails, but it's starting to allude to it, and it's a visualization of what can happen in the market. So you've got accumulation candle right here. Price sweeps the candle and closes inside the range. We've got confirmed sweep. What are we expecting? Distribution to the candle's low. So price trades off and it gets there. We get a completed CRT, a completed AMD pattern. Then what happens? Price rejects and closes inside this candle's range. So what are we now expecting? We're expecting distribution to the high. But then we get a question mark in between. Price trades into this high, closes. So now we have competing bias. Are we going higher, or is this AMD pattern going to be respected, and are we going to trade lower? Now it's not just like a random bullish versus bearish scenario and you bet on one. There's a very good reason why this pattern played out. And there's also a very good reason why this pattern did not. And that is this. So why does manipulation fail? It's either higher time frame targets are not yet swept. So price has unfinished business before your setup can play out. You're in the trade too early. Or you're trading against higher time frame distribution. So let's look at exactly what that looks like and make a note of this, because this is something you need to train your eye to see. So if we look at this range of price action, what do we see? We have price, and for those that are just joining, we're looking at the 12-hour time frame, and behind our 12-hour time frame we have a 2-week candle range. So we're trading 2-week ideas on the 12-hour time frame. So it's swing trading. So we get a break above and a close below. Okay, so that's not manipulation, that's really signaling lower prices. So then what happens? Well, price breaks below this accumulation candle. So this is a bearish candle right here. Price breaks below and then closes inside its range. So this becomes our accumulation candle. This becomes our manipulation candle. So now what are we expecting? We're expecting AMD, distribution to the opposing range high. But what happens? Price does trade higher, but then it closes, the candle closes inside this candle's range. So this pattern is failing to play out. So we get a sweep of this candle's range, and what happens? Our expected pattern plays out. We respect this area, we don't trade any higher, and we distribute to the low. So we have failed AMD, completed AMD. We then get, and this is the example we've been looking at in the previous videos, sweep of the low or breakout below, close inside this candle's range. Now, what are we expecting price to do? Trade aggressively to the high, which happens when we take out this high and this high. So we have failure, success, and then actually if you look, we then get another failed AMD. So let's take a look at what we are seeing on the higher time frames to potentially make sense of this. So I'm going to take the 2-week away and I'm going to look at the monthly. Okay, we have a different context now. So we're not looking at 2-week price action, we're looking at a time frame above, the monthly candle. And what we see is that we get this bullish monthly candle for the entire price range. Then price aggressively breaks out or trades into the high and shifts. So we're seeing a shift off of a liquidation of a high. And then what we see is that, you get this consolidation, but price ultimately closes here inside this candle's range. So this now becomes our monthly accumulation candle. This is our monthly manipulation candle. So from a monthly perspective, we're expecting accumulation, manipulation, close inside of the range, distribution to the low. So as price starts to sell off, let's ignore the 2 week for a second. That's our context. But then something else happens. We get price break below this monthly low. So we've come from this point of external range liquidity down to, we've created this point of external range liquidity, and we've created a new point of external range liquidity, a new monthly range. The price is now stinging into, it's liquidating and shifting. Then price ultimately closes inside of this monthly range. So now our accumulation, manipulation, distribution is not occurring. We have new context. Accumulation, manipulation, distribution. So we now trade aggressively where? To the high. So that AMD pattern plays out perfectly. Accumulation, manipulation, distribution. And these candles are quite small, but you do see the pattern unfold. You get a defined monthly low in the market. Price trades into it. There's the wick right there. Shifts in structure, closes inside this range. Then when the new candle opens, where does it go? Straight to the high. So we get AMD. We did have AMD, but the distribution didn't happen. The distribution turned into manipulation, and then we went higher to complete AMD. So now if we bring back our 2 week time frame, this starts to make sense because we get here the manipulation that we talked about. But then as soon as this candle closes, this candle is manipulating its previous monthly candle's range. So there is no reason for this AMD pattern to complete. Once we get a sweep of this high, is there a reason for this pattern to complete? Yes, this is a manipulation candle, so we're expecting lower prices. So once we see this candle close, we have very high chance that this is going to look like it's going to trade higher, but actually sell off. Where's it going to sell off to? At least the manipulation candle low on the monthly time frame, and if not, the accumulation candle low. So that's what it's going to do. But what actually happens is we get a break below the previous monthly low, a structure shift that we described on the last video or last few videos, and a close inside of this 2 weeks candle. So we have a 2 week manipulation candle which closes and confirms right here, and we're also sweeping below a monthly low. So as soon as this candle closes, there's only one place for price to go. It is from this point to this point to complete the pattern AMD. So then we have failed 2 week AMD, completed 2 week AMD, completed 2 week AMD. These two AMD patterns here were in context of the monthly time frame. This to go lower until we got this sweep, this to go higher because we're sweeping the monthly low. This pattern was never going to go higher because we had a monthly manipulation of this candle here. So this is starting to get a bit more advanced, but layering timeframes gives you much more clarity over whether AMD patterns and manipulation is actually going to turn into completed distribution. When you see distribution failing from closed manipulation candles, check your higher timeframes, because you could be trading either in against your higher timeframes draw, or you are anticipating, like this, a long trade. This turns into a monthly low, so it's going to get targeted first. So with that, let's jump into deep dives on the monthly, 2 weekly and weekly candle, because this is going to bring this to life in a lot more detail.